considered both a high inflation scenario and a low inflation scenario. The high inflation scenario would be due to possible supply shocks, such as power rate adjustments and increased rice tariffs. The low inflation scenario would be if investor sentiment remained negative for a protracted period. As you know, growth slowed more than expected to 4% in the third quarter. Sentiment remains weak due to the corruption issue, as we can gauge from various sentiment indices. However, we expect a recovery in 2026 and 2027, partly due to previous rate cuts. It usually takes 1 to 2 years for monetary policy to exert its full effect. We also hope that government infrastructure spending will return to normal levels and be more effective with reduced leakages, and that investor sentiment and consumer sentiment will improve. That said, the BSP may be nearing the end of its easing cycle, with any future easing likely to be limited. We will be assessing the effects of the rate cuts we've made so far, together with other economic developments, including possible supply shocks. Thank you.
Thank you very much, Governor. May we invite Deputy Governor Abinoja to elaborate on the BSP's inflation forecast for 2025 to 2027.
Thank you, Mara. Good afternoon. For the inflation outlook, we will provide some of our latest assessment for this year until 2027. But as we have usually reiterated, it is the next 2 years, at least 1 year ahead, that is the relevant number for the inflation forecast that is relevant for monetary policy. But just to provide information for 2025, as the governor has mentioned, we continue to see benign inflation numbers. The 1.5% latest inflation print confirmed this particular number. Inflation could average 3.2%, and for 2027, 3%. Both numbers for 2026 and 2027 are very similar to what we have released last time. It's slightly higher, and partly that is a reflection of some adjustments in the international oil prices that we have seen in the past few weeks. So I stop here. Thank you.
Thank you, DG Zeno. We now open the floor to questions. We will first accommodate questions from those on-site. This will be followed by questions online. For on-site participants, reminder to please raise your hand and wait for the microphone to be handed to you. Please also state your name and your organization. And we are now ready to take your questions. From this side, please.
Good afternoon. Mikael of Reuters. In the statement, the Monetary Board has mentioned that the easing cycle is nearing its end. So when do you expect the easing cycle to end, and by how much in terms of magnitude are we, in terms of further rate cuts, or are you still contemplating?
So depending on the data, it may have ended already. This may be the last cut, but depending on what else we see, we can still consider another cut.
And in terms of data that you're closely looking at, can you elaborate on which particular data points are you particularly concerned? Is it on I understand inflation, but also are you looking at the impact of the corruption scandal into economic growth, or are there other data points that you're looking at?
So the first thing we look at would be inflation numbers, including possible shocks that would change the inflation rate. Then we look at the demand side, because stronger demand would tend to boost inflation. On the demand side, the the numbers are more difficult to analyze because this time we have this infrastructure spending scandal and possible spillover effects on other things, governance issues related to other things. For example, the BIR issue. So that tends to dampen demand. Which then also means weaker inflation. So we have to assess all those things. There's also global factors that we consider. So as usual, we look at a lot of data, and then we try to analyze them in a consistent way.
Thank you, Governor. Next question, please.
Go. Follow up lang go to the question. Since as you mentioned in the statement that the outlook for growth has weakened, and one of the main reasons, as you mentioned again, is the corruption scandal, which has affected infrastructure spending. So why resort to monetary policy easing? How exactly can a rate cut prop up when this could have been addressed by fiscal policy measures?
Monetary policy cannot address the corruption scandal directly. It cannot. But it can compensate. It can compensate for the effects of that. The effects of that are on business sentiment, on investor confidence, and all that. So that would weaken. When those things weaken, it would weaken growth, and lower policy rates can compensate for that.
Thank you, Governor. Next question, please.
Governor, DG mentioned earlier that oil also is a factor and also the current political climate. So how are, aside from these, are there any other global trade tensions that factor into today's decision, especially with the continued uncertainty?
Oil tends to be a risk factor for inflation, especially when the price of oil goes up at the same time that the exchange rate of the peso weakens. You need a big effect from oil and from the exchange rate in order for that to be inflationary. What was the other question? And the other factors?
With the continued uncertainty, sir, how do these global trade tensions affect?
We still have the global policy uncertainty with us. There's less of it now, but it hasn't gone away. And that also tends to weaken demand. There's a wait and see attitude when you don't know what the situation will be.
Thank you, Governor. Next question, please.
Hi, Gov. Ian
Hi.
from Inquirer. Sir, just want to know lang, sir, if you have an updated estimate of the Goldilocks rate. Sir, do you think... I'm just wondering if you have a more precise estimate of the Goldilocks rate, considering that the Monetary Board expects the easing cycle to near its end. Thank you.
So we look at two things. In the end, we look at two things. What the output gap is. So a negative output gap means we should ease. But we also look at the Goldilocks rate. It so happens that we have several estimates of the Goldilocks rate. And so we're trying to sort out those estimates. So for now, I would say we rely more on the output gap, even as we refine our estimates of the Goldilocks rate. The Goldilocks rate is just so much more tricky to estimate, but it really helps once we have a good estimate.
Thank you, Governor. Any more questions?
Cliff Benson from Bloomberg News. The central bank said any additional easing will likely be guided by incoming data. So what would warrant another rate cut?
Another rate cut would be justified if things are worse than we thought. So, we project growth, we project inflation, and then just as what's happened in Q3 and Q4, growth was worse than we thought. So if that kind of thing continues, then we're likely to cut policy rates again.
So the main consideration for a potential rate cut would be GDP growth. Is that a correct reading of what you said?
Yeah, because for now, inflation is not an issue.
Yes.
For now.
Okay.
Thank you, Governor. Any more questions?
Good afternoon po. Catherine from Business World. Gov, you mentioned that you expect our GDP growth to recover by 2026. How early in 2026 can we expect?
I would say second half, I was hoping we would recover by the first half, but with the new data we're getting, it looks like it's more going to be in the second half rather than the first half.
Just to clarify po, by recovery, do you mean that we're gonna be back to the target? That is
By recovery means, better than now. We've reduced our projections for the first half of 2026. So we hope that there will be some recovery the rest of 2026. And we're hoping by 2027, we will be more or less back on target.
Thank you, Governor. More questions from this side?
Good afternoon, Tatiana from Rappler. Just a quick follow-up to the earlier question. You mentioned, Gov, that you're hoping that by second half next year we'll be able to recover in terms of economic growth. What sort of factors are you guys looking at? What are the things that need to align or need to happen in order for us to bounce back within that timeline?
I think the main factor would still be the governance issue. When investors and consumers feel that those issues are being addressed, then we should see some recovery.
Thank you, Governor.
Good afternoon po. Roel Castro, Malaya. Just this week, or the past days, nirelease yung unemployment rate natin and the inflation that picked up. Tatanong lang, how did that factor into the monetary board's decision today?
I would say it factored in a little bit. Unlike the Fed, the unemployment rate is not part of our mandate. It's data that indicates what's going on with inflation and what's going on with growth. So it doesn't have a direct bearing on our decision. It's one of the data points that we look at.
Thank you, Governor. Next question from the side, please.
Good afternoon, Gov. Toby from the Daily Tribune. May I ask, our debt to GDP ratios at around, I believe, 60%. Is the central bank looking to manage debt moving forward? Are we looking to be becoming more self-sustainable in the future?
We don't directly work on the debt to GDP ratio. We have a role in terms of providing some advice to the government, but I think a better gauge of the fiscal space that we have is not so much a debt to GDP ratio. It's more what we call the R minus G metric. R is the real interest rate that we pay on our debt, and G is our growth rate. So the growth rate is kind of a measure of how productive our investment will be. And then the R is how expensive the debt will be. The problem with just debt to GDP is it doesn't take account of growth, whereas the R minus G metric does. And with the R minus G metric, we still have fiscal space. But I think the emphasis now is more on quality government spending. rather than quantity.
Thank you, Governor. Next question, please.
Hi, Gov. Just curious lang po how the peso's current performance was factored into your latest decision. Is the BSP worried about how the peso is behaving right now, considering that we just recorded another record low? Thank you, sir.
We look at the peso because we think it may have an impact on inflation. And that happens when the exchange rate weakens a lot. At the same time that there are other supply side factors that lead to inflation. But we don't do monetary policy with an inflation rate target in mind.
Thank you, Governor.
Hi, Governor. This is
Hi.
Keisha from the Philippine Star. You mentioned earlier that the Monetary Board is also looking at global factors. Aside from oil, what global risks are weighing most heavily on the board's policy outlook? For example, on the Fed, regional slowdown, or geopolitics?
So we look at the supply factors, that would be mainly oil, and then the imported food items. Those would be on the supply side. On the demand side, we look at global growth because that would affect our exports. So those are the kinds of global factors we look at.
Thank you, Governor. Next question, please.
Do you see the peso at the 59 level threatening inflation expectations?
The peso threatening,
The peso at 59
yeah.
level threatening inflation expectation.
For now, no. For now, it hasn't weakened enough, and the oil prices have been benign. It's when the two of them move in an adverse direction together that we begin to worry about inflation.
So this week the peso showed some weakness. This week,
Yeah.
the peso showed some weakness. So did the central bank intervene this week in the FX market?
I'm not sure we intervene, but in general, we intervene so that we don't get sharp movements in the peso, and we intervene strategically. We kind of know when the traders are making mistakes.
Thank you, Governor. Next question, please.
Hi, Gov. So, is it safe to say that our cut today is meant to indicate a more cautious policy stance moving forward?
I think that's safe to say. It's a cut. It's a kind of insurance, right? Because we have weak growth, and we seem to have room for a cut, given the inflation picture.
Thank you, Governor.
Sorry, Mike Arcero from the Manila Times. Just to clarify, you still have a room to cut further, and you've mentioned that this might be the last cut for, I don't know, for until next year. Are you saying that this could be a long pause, or are we expecting for at least 2 more rate cuts? Because some analysts are saying na 2 more rate cuts for next year, but it would be gradual.
We're in the territory that if we just look at our usual factors like the output gap, like the Goldilocks rate, it's not clear that we should cut. But when we look at other things and here the judgment of the Monetary Board begins to be important, it seems like a cut would be useful at this point in time.
Thank you, Governor.
Just to follow up, Gov, you mentioned earlier that the past rate cuts could revive the economy a little bit. From the past rate cuts, how many percentage points na po yung translate to the economy?
So we've got 200 basis points, including this last one. Zeno will answer that question.
So it usually takes about 1 1.5 years before we reach the full impact of the rate cut. So it's starting only right now that we are getting the benefits of the previous accommodation. However, the impact is disentangling the effect of previous monetary policy moves is becoming more challenging because of the other factors that also is affecting domestic demand. The governor has mentioned the role of sentiment and also some external factors. So all of these combined, it's possible that the concerns on governance issues is the main driver right now of what we are observing as a slowdown in domestic demand. But certainly the previous policy actions contribute to economic growth, and we anticipate that it will continue to work its way to the economy in the coming quarters.
Thank you very much, DG Zeno. Another question from the floor.
Good afternoon, Gov. Victor from GMA. Here you go. You mentioned that the policy can compensate for the corruption cycle. Just wanted to ask, because in the previous briefing, you mentioned, aside from policy, maybe other measures such as the threshold on with transfers, fund transfers. Just wanted to ask for updates on that.
Thresholds on what?
On fund transfers, Gov, during the last policy meeting.
The threshold on cash withdrawals, right?
Gov, you said that aside from the withdrawals, you're also looking at implementing a threshold on fund transfers, may it be digital or cash.
We're looking at all sorts of things. We're looking at many things. We're still figuring out what we can do to limit money laundering. So that's work in progress. For now, the thing that we're confident about is the limit on cash withdrawals. Limiting it to 500,000, but with enough due diligence, the banks are allowed to allow bigger withdrawals.
Thank you, Governor. Next question.
Gov, I understand there will be a meeting of the economic managers tomorrow in Malacanang, if I'm not mistaken, and the BSP will be part of the meeting. Could you give us a preview on what will likely be discussed in that meeting tomorrow?
Maybe better for DBM and DO.
Yeah, we're observers at these meetings. It's really more Department of the Budget and then Department of Finance who decide the agenda for those meetings.
Thank you, Gov. Next question.
Good afternoon, Gov. Could you say with conviction that the low inflation that we are seeing now is more due to low demand rather than supply issue? And given the ongoing graft scandal that we have, are you anticipating more challenges, or would you say that the worst is over in terms of economic impact?
I wish
Thank
I
you.
could say the worst is over. I thought the worst was over, but the new data suggests that even Q4 will see weak growth. What was the beginning of your question?
Would you say that the low inflation is more due to low demand?
There are supply factors. There are supply factors that help lower inflation. So it's both. It's both a weak demand and supply factors and favorable supply factors.
Thank you, Governor. Any more questions? We proceed to questions we received online. This is from Christina Ulang of First Metro Investment Corporation. She is asking, could an exchange rate settling at 60 or higher slow the pace and scale of the BSP's rate-cutting cycle next year, assuming that inflation remains within target?
I would say no. We don't, unless it has an impact on inflation, we don't really decide on monetary policy based on the exchange rate.
Thank you, Governor. Last question from online. This is from Mr. Michael Ricafort of RCBC. Since last week, there have been market expectations of more Fed rate cuts for 2026, especially if the new Fed chair and any new Fed officials appointed would be pro-Fed rate cuts. Would a more dovish Fed support more BSP rate cuts in 2026 to maintain healthy interest rate differentials?
It's two things, right? In the past, maybe a few years ago, the market tended to look at the differential between our policy rate and the Fed's policy rate. Now it's at the differential is about 87 basis points. In the past, that would lead to a weakening of the peso versus the dollar, because in the past people wanted the differential to be 100, at least 100 basis points. But we don't see that weakening anymore. The weakening when it's less than 100 basis points. The market tends to look at, I think, at the relative dovishness of the Fed compared to us. We're somewhat dovish, I would say. Actually, the term is we're kind of hawkish, I would say, but the Fed is more dovish, I would say, because they had a divided vote, and some of the members of the FOMC wanted an even bigger cut, or at least one member wanted an even bigger cut. And then in May, there may be a new chairman of the Fed, and if there's a new chairman, that person is likely to be very dovish. So I think that's what the markets are looking at.
Thank you, Governor. Any more questions? We can accommodate the last question from the floor. Okay, last two. Last two.
Good afternoon po. This is Jericho from Manila Bulletin. Good afternoon, Go. Good afternoon, DG Zina. DG Zina, you mentioned earlier that the recent policy easing has already started making an impact to the economy. Could we possibly have your outlook for 2026 and 2027 until 2028 growth figure? Thank you.
Thank you. So the growth outlook is being reviewed by all the economic managers right now. On the part of the BSP, as the governor has mentioned, 2025 would be a bit weaker than what we initially expected, even compared to what we announced last time. So it's possible that it will be close to 5 or sub 5 for first half of for the year. And then for 2026, it's the recovery might take greater traction by the second half of 2026. So it will certainly be better than we think what we are seeing right now. In 2027, that's where we hope to have be closer to the initial targets that were announced. The governor has mentioned that aside from the monetary policy, and I think even the statement also mentioned that it will be also important to consider what the government is doing in terms of confidence building, as well as the quality and the pace of spending moving forward. So these policy levers, both of them, will continue to have a role on the growth outlook moving forward.
Thank you, DG Zino. For our last question.
Hi again, Gov. Gov, I just want to clarify, DG, I just want to clarify, with the current domestic prospects weakening, it's primarily caused by the current political climate and also the global oil prices. But are there any other sectors that's showing or affecting this slowdown? Any other sectors, maybe agriculture? Because you mentioned earlier that it's also due to supply.
The typhoons have had a significant effect. So that's a supply factor. But investment spending, consumer spending, when there's negative sentiment, those things slow down. But those are on the demand side. So monetary policy can compensate for the weakness of consumer spending and the weakness of investments.
Thank you, Governor. And this ends our Monetary Policy Stance press briefing. We would like to thank everyone, including those watching us live on Facebook, for their time and attention this afternoon. Maraming salamat po.